Corporate finance practice problem using Excel. Calculate preferred stock current yield. Get ready, it's time to take your chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we are in the practice tab as opposed to the example tab. The example tab in essence being an answer key. We have the information on the left-hand side. We'll use that to populate into the blue area on the right-hand side. We're looking at the preferred stock, and remember, we're considering the financing options for an organization, which you could categorize two broad categories: debt financing, the equity financing. We're looking here on the equity side of things, therefore not having to worry so much about the tax impact, given the fact that we have equity financing as opposed to debt, which includes interest typically, something that will be deductible and therefore has a tax impact. So preferred stock, we have the preferred stock issued in the past. We're going to imagine this stock was issued at 200 par value. The yield at the time of issuance is 10%. We're saying the current price is now the 175, so we want to figure out what the current yield is at this point in time. So we're going to say, all right, let's go ahead and pick up I'm going to calculate the annual dividend payment, because they didn't give us the payment, they gave us basically the things that we need to calculate it, that being the 200 and the 10% here. So I'm going to say the par value is going to be equal to the $200, and then we have the yield at time of issuance, we'll call it. That was the 10%. So picking up the 10%, let's put a percent there by going to the number group, percentifying it, font group, and underline it. That will then give us our annual dividend payment, which is going to be in the outer column. I'm going to be picking up the 200 times the 10%. That's going to be the $20. And let's go ahead and add some formatting here by going to the alignment, increase the indenting. I'm going to increase the indenting again. So there we have that. And then this is going to be the current, let's call it the current market price that we're going to be comparing to, that being then now at the 175. Going to put an underline here, font group and underline, and that'll give us our current yield, which would then be equal to the $20 of the dividend divided by the price of 175. And then if we go to the numbers group and percentify that, we're looking 11. Let's add a couple decimals, 11.43%. So note, this is kind of a reverse or backing into a way for the current yield here. So we had to figure out, in order to figure this, we had to figure out the dividend, which is simply going to be what it was issued for, the par times the yield at the time of issuance. That'll give us our $20. That would be our dividend. That often is something that we might know basically in practice. We're going to compare that then to the current market price, which in this case is going to be the 175. So the 20 divided by the 175 gives us our current yield, that comparing the dividend to the current market price of the 11.43%.